Let's get more on this market sell-off from Johnatan Corpina, Senior Managing Partner at Meridian Equity Partners. Johnatan, thanks very much. Alarming headlines. Of course, there are fears over the integrity of NATO here with this face-off between the Europeans and the US. What are you telling investors right now?
Yeah, kind of an interesting risk-off trade that we're seeing after this long weekend. And as you mentioned, markets were closed yesterday. Comments coming out of Washington, President Trump is really digging his heels in the sand about his position on acquiring Greenland and the implications if the countries of NATO don't go along with this, the implications of that. We're seeing pressure in our markets today because of exactly that. There are other factors that are out there that can certainly move this market, but I think that's the primary one right now. I think what's this showing us is how fragile our markets are. I don't think the market should be overly reacting the way that it is and what we're seeing right now, but it's just showing me how this market is again, fragile, right? We're trading close to the highs in some of our indices. We've seen some pretty good, movements in sectors. Investors are looking for opportunities or reasons why to take some money off the table. They're using this as an excuse right now. I wouldn't expect this particular headline to drive the market for the rest of the week. We've got a lot of other things that are going on. A couple other headlines that have gone quiet. For example, the conversations of us invading Iran or any attacks on Iran. That got very quiet very quickly as we headed into the last weekend. We've discussed the 10% cap on interest rates for credit cards. President Trump deadline today. How is that going to play out? That was a very big headline last week that no one's really talking about right now. So these are, between Iran and credit card companies, there's a few things that are going to come up. We'll see how it plays out and the impacts on the markets.
Thousands said to be killed in Iran amid these protests. And I see the head of one of Japan's huge shipping firms, Mitsui OSK, saying that we can't ignore the risk here, including potential disruption to traffic through the Strait of Hormuz.
Yeah, I mean, clearly the geopolitical risks that are out there are certainly alarming. And then on top of that, the way our global economy works and the way our trade balance works, things will get disruptive. And how does that impact companies, countries, individuals? So it's clearly something we're keeping our eyes on. How this plays out, when it plays out, is going to be rather interesting. Again, keep in mind last week, hot and heavy on Iran and what's going on there. And we have no information, no headlines from this weekend on it at all. And now we've shifted to Greenland. I don't know if this is a way of kind of distracting over here while something might be going on over there. We're going to have to see how this plays out. But I think as we discuss this, clearly the uncertainty of a lot of things that are going on right now is causing our investors to pull out of the market right now. Again, I think this is a little bit of an overreaction, but maybe we need this to kind of flush things out a little bit, wake people up a little bit, and see that money that's been waiting to come in from last year into our markets this year, see if that does in fact come in as we're starting to see some discounted prices.
Meanwhile, a domestic U.S. story is Trump's demand that credit card rates get capped at 10%. Apparently that shook investors in bank stocks. What's the latest there? I mean, we do hear it would be a tough move for Trump to make in legislative terms.
Yeah, but that hasn't stopped him before, and I think he's going to continue to power through this one. The implications of that, the ripple effects of that, we're still trying to work through. Where if you put in a cap on 10%, yes, that helps the consumers. Do the consumers use that as a help to pay down their balances, or do they use that to draw more off these balances now that the interest rates are much lower, much more attractive? From the credit card company, from the financial company point of view, they capture such a large amount of fees from high interest rates, and those high interest rates are going, for creditors who don't have a high credit score. So how does that play out? How does that impact bottom line of credit card companies? We can play both sides of this. I can see where it does help the consumer. It's not going to help the credit card companies. But for President Trump to be able to, vocalize that he wants to put a cap on this and implement it rather quickly. I don't know if it's going to get the traction he wanted it to get in a short period of time. We're going to see how this plays out. Again, he did put a deadline on today. I know he's obviously has a lot of other things that he's looking at and working on. So I don't know if this one gets pushed to the side or not. But this was a big headline last week. We had all the big bank CEOs on television, really pounding the table on this and the implications of that. So I don't think this goes away quietly.
And then finally, Scott Bessent, the Treasury Secretary, not happy that the Fed's Jay Powell will attend a Supreme Court hearing on the president's attempt to dismiss a Fed governor. He says, if you're trying not to politicize the Fed, for the Fed chair to be sitting there is a real mistake. Well, I think President Trump has been trying to politicize the Fed.
Yeah, it seems like everyone's playing in the sandbox now with the same rules. Yes, in fact, the White House has been trying to pull the strings of the Fed influence. We can see the comments he's made directly and indirectly about what the Fed should do. The Fed has always stated that they're going to be apolitical and be data dependent and make their decisions that way. I think this movement now of Powell might be kind of playing a little bit into Trump's hands now, and he might use this as to his advantage in a way of saying, in fact, what you said, it's supposed to be, we're not supposed to politicize this, but that movement is showing that. So again, a lot of pieces being moved on the chessboard today.
Just, Jonathan, before we let you go, what would you say? Could you characterize the mood on Wall Street and among traders? Is there a feeling, hey, we should maybe step back from equities for a while?
If I had to summarize it in one word, I would say it's quiet, right? I think there's a lot going on. Go back a few weeks with the Venezuela headlines and what's happening now, what we've discussed now. There's a lot that's out there that can really pivot our markets. I think Wall Street is somewhat quiet now, meaning they're silent, waiting to see how this is going to play out. There's a lot of serious implications and headlines and groundbreaking measures that are in the works, and how this all plays out is going to be pretty significant to our economy and our security, and potentially reading about this in history books down the road. So I think we've all kind of are sitting and waiting for that next headline. We've got Davos going on. Watching the headlines there, the interviews that are coming out with the time difference, we're waiting and seeing what's happening. Looking ahead to next week, we've got the Fed next week. All bets are that they are going to pause and not shift interest rates at this time. I don't think any real economic data or headlines will change that pattern for now. But I think we're somewhat in a holding pattern.
Thank you very much, Jonathan. I really appreciate it. Johnatan Corpina.
Thank you. Have a great day.
Senior Managing Partner at Meridian Equity Partners.